U.S. Congress has again stepped in to block Chinese companies from listing on U.S. stock exchanges. Key Republican figures have officially called for the delisting of major Chinese companies, including Alibaba and Baidu, destroying them as national security threats.
According to a report by the British Financial Times on the 2nd, Republican John Mulena, chairman of the U.S. House of Representatives Special Committee on U.S.-China Strategic Competition, sent an official letter to the U.S. Securities and Exchange Commission (SEC), urging the delisting of major Chinese companies, including Alibaba, from U.S. stock markets. The letter was also co-signed by fellow Republican Rick Scott, chairman of the Senate Committee on Aging. They strongly assert in the letter, these companies profit from the capital of U.S. investors, while supporting the strategic goals of the Chinese Communist Party, and are complicit in military modernization and human rights abuses. Chairman Mulena and Scott warned that these companies are not just opaque, but are integrated into the Chinese military and surveillance system. The companies directly mentioned as candidates for delisting are 25 representative big tech companies in China, including Alibaba, Baidu, J.JTimes, and Weibo. They argued that they pose unacceptable risks to American investors. In particular, Chairman Mulena emphasized that the SEC should actively utilize its regulatory authority. In other words, it has the authority to suspend or cancel the registration of securities of companies that fail to properly protect American investors. And now is the time to exercise that authority. Currently, there are 286 Chinese companies listed on the U.S. stock market, with a market capitalization of a whopping $1.1 trillion, or about 1,500 trillion won. Concerns have been raised consistently among Congress and security experts that many of them are linked to Chinese government or military networks. This pressure goes beyond simple political offensives and shows that the U.S.-China technological, economic, and security conflict is spreading to Wall Street. In addition, U.S. Treasury Secretary Scott Bessent recently said, all options are on the table regarding the possibility of delisting Chinese companies, suggesting the possibility of a government-level response. However, it is still unclear whether this measure will be implemented in practice. SEC's new chairman, Paul Atkins, has only been in office for a short time and has not yet disclosed specific policy directions regarding China. However, within the U.S. Congress, the trend is strengthening that the expulsion of Chinese companies should be actively used as a trade pressure card. Not only Republicans, but also some Democratic lawmakers are expressing concerns about China's lack of transparency and security threats. So the possibility of future bipartisan cooperation cannot be ruled out.
Chinese companies listed on the U.S. stock market. Now it is not just an economic issue, but a strategic security issue. The whole world is watching to see what direction the U.S. will take next.